Hello everyone, this is today's video analysis for February 19, 2019. Today we're taking a look at the EURUSD, the Euro, versus the US dollar for today's trade analysis. We're starting here on the daily time frame. We can see that the euro dollar has been basically range bound for the past 5 or 6 days. Take a look down here, bottom right hand corner of the chart. There's a blue box down here. Today included 1, 2, 3, 4, 5, 6, 7 days now. We've been stuck between the green zone as our resistance zone and the orange zone as our support zone, and really haven't seen any trending behavior for the past 7 days for this currency pair. Prior to that, though, clearly a downtrend. The US dollar was having a really strong push higher. The euro was selling off against the US dollar and sending this lower from the pink zone all the way up into the 114s, down now into the 112s. So the question is, what do we do with this today? I think it's still kind of up in the air. As long as it sits above the orange zone, I don't think selling makes a wise decision. Above the 1.1280 level, that's the top of the orange zone. Selling on top of there for the past 7 days has been not a really good idea. So I don't think we want to do that. I think if we're going to go short or sell, we want to get it close as possible, 113.1035, the green zone. So we're not there. Potentially, we look for intraday buying opportunities if it continues to hold support here, as it has the previous 6 days here on the 7th day. Here at 1280, 1260, may be an opportunity for a long shot for an intraday buy. We don't really have a significant amount of news today out of the U.S. You know, we've had some news early in the day for the euro, but about 5 a.m. Eastern U.S. time, we had some news for the euro, but nothing really coming up in the next 12 hours or so during the U.S. trading session. We don't have any significant U.S. news, some housing market index news at 10 a.m., but that's it really for the U.S., and really nothing for the euro for the rest of the day either. So is there anything to be a motivator, a catalyst for this to break out of this range? I don't think so. It doesn't mean it won't. It just means there's nothing really scheduled that would be the catalyst. Take a look at the U.S. dollar index. It's also kind of stuck. Let's put them side by side. We see the U.S. dollar index kind of stuck in that range as well, don't we? So you put them side by side in this very similar situation. So for the time being, as long as the US dollar is stuck under the green zone as resistance, we see the euro dollar stuck above the orange zone as support. So if the US dollar could be successful in its rally and continue the upside getting above the green zone, then of course on the opposite side we would expect the euro dollar to get under the orange zone. Hasn't done that yet. In fact, today we see, at least at the current moment, 96.85, 95 on the US dollar index, green zone holding resistance, which of course the opposite of that is holding support on the euro dollar. For the US dollar to go higher, again, we don't have any real significant catalyst for the day today. So we see the US dollar holding resistance, euro dollar holding support. If we're going to go long on the euro dollar, let's say we intraday buy 112.80, we want the US dollar to be as close as possible to that green zone. That way we at least limit our risk. Our risk right now, if we were to buy euro dollars, is that our stop loss needs to be underneath the orange zone. So to make that stop loss smaller, we don't bring the stop loss closer. We allow the market to dip closer into the orange zone, reducing our risk, maximizing the potential gain back to the green zone. Now, if we were going to sell, it'd just be the opposite. We would prefer to see the US dollar down here at the yellow zone holding as support if we wanted to go short on the euro dollar, support on the US dollar to go back up, resistance green zone to go back down. Of course, if we were going to do that, again, our risk is just above the green zone, because we know that if it gets above it, that's the risk in this scenario. So we don't want it to break above if we decide to go short on the euro dollar. Again, I think if you're going to do either one of those things, short the green zone on the euro dollar, buy the orange zone on the euro dollar, you want to see the opposing viewpoint on the dollar index at the green zone or at the yellow zone. And right now we're bouncing off the green zone, which again means more likely you'd be looking for bounces off the orange zone. The risk is the break of the orange zone, the continuation of the downward trend for the euro dollar.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.